this hour is President Trump's tariff plan.
He announced sweeping new tariffs against all of America's trading partners this afternoon from the Rose Garden of the White House. Tim Blotz listened to the with the headlines from today. So, Tim, it does sound like this will affect all of our trading partners.
Every single one of them, and every country now that sends products to the United States starting tomorrow gets hit with a minimum of a 10% tariff on all goods. And then there are the dozens of countries facing even higher reciprocal tariffs because the president believes they've treated the U.S. unfairly with the goods that we ship them. And it all begins with China, which the president claimed charges a 67% tariff on American trade products.
So 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge.
Well, the president says the European Union charges U.S. companies a 39% tariff, and the president now responds with a 20% tariff on all EU products. And all of this in addition to the 25% tariff on automobiles and car parts, all starting at midnight. The president says the only way a country can avoid tariffs is by moving their production to the United States. Amy?
All right. Thanks, Tim.
Trevor Ault is on Wall Street with more on how the markets are reacting to the president's new tariffs. Trevor, good morning. It was an immediate response in stocks.
Absolutely. Even though President Trump, notably Rebecca, made this announcement that the tariffs were officially taking place after the markets closed yesterday, but we saw that drop in market futures right away. Last night, a fall of about 1,000 points, and this morning, the Dow is projected in those market futures to fall about 1,200 points upon opening. The NASDAQ dropping almost 4%. Now, these are futures. We'll know for sure once we get to that opening bell. And we also could see, of course, an immediate impact on shipping. What we're showing you now is the port of New York and New Jersey. This is the third busiest port in the country. Every year they bring in the equivalent of about 8 million 20-foot shipping containers, everything from furniture to appliances to vehicles, you name it. Of course, they also ship things out as well, and the Trump administration is hoping that soon we will not be bringing in quite so much from overseas, but time will tell. In the immediate, though, it does appear like we're in for quite a bumpy ride with the markets, and it could soon get more expensive for American consumers.
Our big story at noon, a second straight day of massive drops on Wall Street. These are live numbers right now from Wall Street, where the Dow is down more than 1,600 points as investors respond to new tariffs from President Trump. And just a few hours ago, China fired back with retaliatory tariffs of their own. The president saying he's now open to negotiations. NBC's Alice Barr is in Washington with the latest.
Amid a major market sell-off Thursday, marking Wall Street's worst day since the depths of the pandemic, President Trump downplaying the reaction to his sweeping new tariffs, arguing the economy is like a sick patient in recovery.
The operation's over, and now we let it settle in.
The global trade war, though, only ramping up, with China announcing a matching 34% tariff on all U.S. imports as trading partners from the European Union to the UK and Canada prepare to retaliate.
That it's intended and will cause maximum impact in the United States.
President Trump suggesting the tariffs could change, framing them as a negotiating tool with other nations.
We're taking it to a whole new level because it's a worldwide situation.
The breadth and scope of the administration's tariffs overall rocking many small businesses like Rhoda Auto Repair that doesn't control where parts come from in a global supply chain.
It's steel and aluminum that goes into those parts. It's where those parts come from and are sourced.
All of that expected to drive up prices, and Democrats are hammering the impact on American consumers.
The Yale Budget Office projects that it will cost the average family $3,800 more this year.
A new jobs report shows stronger than expected hiring in March and a slight increase in unemployment before the full tariff picture hit. As forecasters like J.P. Morgan up the chances of a global recession, administration officials are making a full court press to reassure.
We're reinvesting in the United States of America.
Adamant the tariff strategy will bring American manufacturing and jobs back to the U.S., a process economists warn may take years. In Washington, Alice Barr, NBC News.
New developments regarding the tariffs announced by President Trump, which prompted major sell-offs in U.S. and Asian markets.
The president's sweeping plan will affect nearly every country on earth, with the auto industry already feeling the impact of those new tariffs. Jared Hill live in the newsroom, and we're hearing an update right now about China's reciprocal tariffs against the U.S. Right, Jared?
Yeah, that's right, Chris and Mary. This came in within just the past couple of minutes here. The Chinese government is announcing its own reciprocal tariffs on the U.S. reciprocal tariffs. So we're talking 34% tariffs on American goods coming into China. And this is going to be something that starts on April 10th, they say, on top of a couple of other measures, as we are seeing a number of countries around the world try to figure out how to respond to this. The White House is looking at this, as well as the market volatility, as expected, temporarily painful economic reset. Meanwhile, President Trump is not changing course.
Financial turmoil after news of President Trump's tariffs. U.S. markets took a nosedive Thursday, but aboard Air Force One, the president's optimism sky high.
We have tariffs, they've been set, and it's going to make our country very rich.
Framing the taxes on imported goods as a bargaining chip.
The president's trade policy is going to do a lot of economic damage.
With President Trump's 25% tax on imported cars and auto parts, U.S. automaker Stellantis announced it's temporarily laying off 900 employees at 5 U.S. facilities as a result of pausing production in some of its plants in Mexico and Canada. Canadian Prime Minister Mark Carney announced his own tariffs in retaliation to the U.S. move.
We take these measures reluctantly.
On Capitol Hill, Republicans and Democrats criticized the president's trade policy.
The president made one of the dumbest decisions in history.
As Trump allies work to calm concerns.
He's asking for and needs this space to flex America's muscle as the largest consuming nation in the world.
Asking for time.
All right, diving a bit more deeply, it looks like China also is going to be adding 11 American companies to its list of what they call, quote, unreliable entities, essentially barring them from doing business in China or with other Chinese companies. All the while, President Trump says more tariffs could be on the way, specifically looking at pharmaceuticals and computer chips.
And Jared, yesterday the stock market took the biggest hit since the pandemic after the announcement from China. We're seeing Dow futures drop even more as we await the market opening this morning. What can we expect today?
So based on what we are seeing across the world, really, is that there potentially or likely will be another down day for U.S. markets. We have seen the same with the London stock market, which opened up a couple of hours ago. Similar with Asian markets, also down. U.S. futures are down as well this morning. A big question is going to be by how much will they be down when the stock market actually opens, and what kind of response, again, we will continue to see from the White House as they continue to say that this is expected, that this is temporary, and that they're in this for the long haul.
Jared Hill in the newsroom. Thank you, Jared.
France's president is shocked by Donald Trump's sweeping tariffs. He argued that they would negatively affect consumers in the U.S. first and foremost.
The decision announced last night is both brutal and unfounded. It is unfounded because trade imbalances are not corrected by imposing tariffs. Economic theory clearly demonstrates the opposite.
In total, France exports 47 billion euros of goods to the United States. Many sectors will be affected by America's import tariffs. Wine and cheese producers, for example, fear their revenues will dip. To deal with these new customs duties, Emmanuel Macron is calling for a coordinated European response.
If Europeans act together, preparing a unified, proportionate and effective response, with all sectors working coherently with true solidarity among them, then we will achieve our objective, the dismantling of tariffs.
Nous saurons avoir ce qui doit être notre objectif, qui est le démantèlement des tarifs.
The French president called on European companies to suspend their investments in the United States.
What message would it send if major European players were to invest billions of euros into the American economy while they are imposing tariffs on us?
According to the French Treasury, in 2023, the United States was France's fourth largest export market, behind Germany, Italy, and Belgium.
At the Fed, we are squarely focused on achieving the dual mandate goals that Congress has given us of maximum employment and stable prices. While uncertainty is high and downside risks have risen, the economy is still in a good place. The incoming data show solid growth, a labor market in balance, and inflation running much closer to, but still above, our 2% objective. After a couple of years of solid growth, many forecasters have anticipated somewhat slower growth this year. The initial reading for first quarter GDP will be released later this month. The limited hard data are consistent, though, with a slower but still solid growth outlook. At the same time, surveys of households and businesses report dimming expectations and higher uncertainty about the outlook. Survey respondents point to the effects of the new federal policies, especially related to trade. We are closely watching this tension between the hard and the soft data. As the new policies and their likely economic effects become clearer, we will have a better sense of their implications for the economy and for monetary policy. Looking across many indicators, the labor market appears to be broadly in balance and not a significant source of inflationary pressure. This morning's jobs report showed the unemployment rate at 4.2% in March, still in the low range where it has held since early last year. Over the first quarter, payrolls grew by an average of 150,000 jobs per month. The combination of low layoffs, moderating job growth, and slowing labor force growth has kept the unemployment rate broadly stable. Turning to the other leg of our dual mandate, inflation has declined sharply from its pandemic highs of mid-2022. It has done so without the kind of painful rise in unemployment that has often accompanied periods of tight monetary policy that are needed to reduce inflation. More recently, progress toward our 2% inflation objective has slowed. Total PCE prices rose 2.5% over the 12 months ending in February. Core PCE prices, which exclude the volatile food and energy categories, rose 2.8%. Looking ahead, higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters. Reflecting this, both survey and market-based measures of near-term inflation expectations have moved up. By most measures, longer-term inflation expectations, those beyond just the next few years, remain well anchored and consistent with our 2% inflation goal. We remain committed to returning inflation sustainably to our 2% objective. Turning to monetary policy, we face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. Our monetary policy stance is well positioned to deal with the risks and uncertainties we face as we gain a better understanding of the policy changes and their likely effects on the economy. It is not our role to comment on those policies. Rather, we make an assessment of their likely effects, observe the behavior of the economy, and set monetary policy in a way that best achieves our dual mandate goals. We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent.
Good evening, and thank you for joining us. We begin tonight with major developments at Windsor Assembly Plant. In a letter sent to their employees, Stellantis says the decision to shut down the plant for 2 weeks is the result of U.S. President Donald Trump's tariffs. Let's head straight to CTV's Chris Campbell with our top story tonight. Chris.
Stephanie, this was a decision that had been rumored for weeks, but Unifor Local 444 President James Stewart says Stellantis confirmed it late last night. It came just hours after U.S. President Donald Trump's announcement on reciprocal tariffs.
That's the shocking part, that within 3 or 4 hours they made that decision.
A decision directly tied to Donald Trump's retaliatory tariffs. Unifor Local 444 President James Stewart says Stellantis told the union that Trump's announcement was the deciding factor to shut down Stellantis in Windsor for at least 2 weeks.
If they lose jobs over this, that's as devastating as a war. When you take away their ability to make a living for their families and have a good, a good quality of life, this is just as devastating as a military attack.
Stellantis has confirmed Windsor Assembly will shut down for the weeks of April 7th and 14th. Production is expected to resume the week of April 21st. Stellantis is also pausing production at its Toluca assembly plant in Mexico for the month of April and temporarily laying off workers in Michigan and Indiana, affecting 900 U.S. employees. In an email statement, Stellantis officials said they continue to assess the effects of the recently announced U.S. tariffs on imported vehicles and will continue to engage with the U.S. administration on these policy changes. Immediate actions we must take include temporarily pausing production at some of our Canadian and Mexican assembly plants, which will have an impact to several of our U.S. powertrain and stamping facilities that support those operations.
Hang in there. I'm happy that all three levels, all three party leaders are talking about supports for workers at a difficult time.
Windsor Mayor Drew Dilkens says this is a difficult time, but we will get through it.
We're used to difficult times in the past, the peaks and valleys of manufacturing and automotive. We will get through this too. It's just going to be choppy waters while the U.S. administration sorts out their business.
While Stellantis is reviewing its production schedule, there's concern Trump will move forward with tariffs on automotive parts in the next few weeks.
In automotive, especially in these three countries, we're so intertwined. The Americans cannot aim at Ontario and miss Michigan. And there's nothing about Stellantis that's inefficient. This product is segment leading.
Canada's auto sector employs more than 120,000 people, with about 460,000 people working in related industries. Products that are compliant with the Canada-United States-Mexico agreement are exempt for now. Stellantis says it will reassess the situation over the coming weeks. We'll continue to follow this story and bring you the latest developments.
We're going to see the big golf tournament at Doral. I'm speaking tonight for charity, and then we'll be coming back here pretty quickly, but they're having a big event, and a lot of charitable causes are involved, so we look forward to that. It's in Miami at Doral.
President Trump, the markets today are way down, the worst day in years because of the tariffs. So how's it going?
I think it's going very well. It was an operation, like when a patient gets operated on, and it's a big thing. I said this would exactly be the way it is. We have $6 or $7 trillion coming into our country, and we've never seen anything like it. The markets are going to boom, the stock is going to boom, the country is going to boom, and the rest of the world wants to see, is there any way they can make a deal? They've taken advantage of us for many, many years. For many years, we've been at the wrong side of the ball, and I'll tell you what, I think it's going to be unbelievable. The thing that people have to talk about, we're up almost to $7 trillion of investment coming into our country, and you'll see how it's going to turn out. Our country's going to boom.
I guess to some extent in Donald Trump's interest to make out that this is an enormous moment. But the US is the world's biggest economy, and if it's making big changes to its tariff, to its trade policy, then that matters. And let me just give you a little bit of context, Darren, because you're talking about, where does this stand in historical comparison? What this chart is showing you is the average US tariff rate going back to 1891. So we're looking deep through kind of history here. The bit that I've labelled there, that's Smoot-Hawley. Now, there was this act in the 1930s which basically raised a lot of tariffs. It's infamous amongst economists because they see this as contributing to the Great Depression. But then look at what happened next. So that tariff rate came down and down and down and down and down. And when you're talking about the current era of globalisation, that's a pretty good, proxy for thinking about this period we're in, or at least have been living in recent decades. Low tariffs, relatively free trade around the world, and the US being at the vanguard of that. Here's where we are now, and you can probably make out, it did rise a wee bit under Donald Trump the last time around. But here's where we are now, based on the metals tariffs, based on the extra tariffs that we've had on China. Let's have a look at this line. So that brings it up. And it brings it up, actually, it may not look like a big increase, but you're talking there about the highest level that you've seen since perhaps the 1960s. So again, that's historic. But if, and this is the big issue right now, no one knows for sure what the president is actually going to announce here. No one really knows. It seems like some people in the White House don't know the full detail of it. But if it is as radical as some of the words we've had coming out of the White House, here's how that line might end up looking. Just look at that. So that's on the basis of extreme reciprocal tariffs. So you're taking it to almost an unprecedented high. And when we talk about reciprocal tariffs, again, we're going to get detail later on. But here's one way of looking at it. Basically, the idea and the pitch is the US is going to start imposing tariffs on other countries at the kind of more or less the same rate that they are charging tariffs on the US. And if you're just looking at tariff rates and how they differ between places like India, Germany, the UK, Vietnam, and the US, here's how things look. And actually, the UK is lower than the US. However, if you decide that you're also adding on things like value-added tax, just have a look at what happens to these lines. That just goes up. That bar goes up through the roof. And that is the big question, and that's hopefully what we're going to find out more about. But if we're talking about this, as you say, Darren, it's not hyperbolic to say that this is a really historic shift in global trade.